started. So you got one of the biggest identified long positions on our OPP come out after 9:30 this morning, and I want to just show it. A couple things we know going into it is, did we rally, or are we rallying or breaking into it? Answer is we're rallying. As you can see, the market clearly has a move up. And then as I play it, you're going to see all this red and green kind of go away because it's rescaling to incorporate the biggest long position and the price it's at and where it's looking to exit. So if I fast forward a little bit, boom, right there. Let's back it up a second and play it in real time. All right. What this is showing us is that you're going to have one position right there come in, pause it. This green line right here, or bar rather, is indicating there's a position, and it is 400 contracts because this gray line above it is indicating where this long position is trying to get out. And then we look over here because we identify anything over 100, and this is 400. So then this number would have went up by 400. This number here would have went up by 400, and it changes some things. It changes the net long positions being greater than the net short positions, and that's where this green line comes in, right? And it also shows this dotted green line, which is the average longs are long from, the average price longs are long from. That's going to go up a lot because now it has to factor in and price in 400 new contracts that are along much higher than where the green line is. So that's why you see this jump a lot. And this is the moment, if you're bullish, not to open a long position. If you're long for this rally, to think of getting out. And if you're bearish, to think of getting short generally. Why? Because there's a lot of competition up here with other longs that might be getting long. And that's why I asked the question, is there some context that we could understand when we see this? And that is, are we rallying or breaking? And the answer to that question is, yeah, we're rallying. And therefore, you probably picked up a lot of longs with some profit in the trade. You've probably are going to get them to say, let me get out, let me get out, let me get out. And so that's like a near kind of temporary top, at least, where you get this to come off. And then you shouldn't be surprised because it's a probability thing. And then when we go back up, I had said they're going to use it. Even if they fill it, they'll use it as temporary resistance, and then it's bullish above it. So we move along and we go up, boom. As soon as they fill it, let me back it up. As soon as they fill it, you're going to see our green PWAP line shoot lower. The reason why you see it shoot lower is because now it's not factoring in, and there it goes straight down. It's not factoring the 400 long contracts because it's no longer in a long position. Now, in order for this to go away, it doesn't necessarily have to get filled completely. It doesn't even have to get filled. If that order is pulled, that 400 lot is pulled, we have to assume that long position is no longer long. He might have got out somewhere else. So we can no longer track him if he pulls that order. But when it also gets filled, we pull it because he's no longer long. He got filled by selling those 400, or at least some of them if he had pulled the balance. So it's gone. You could see the OPP, these greens and reds rescale. And the market does kind of use this as resistance. And then once it gets above it, it takes off, which is an important moment and price to highlight in real time, to not be short and trapped and chasing it. So even if you don't get long for this pop that's going to happen, you can prevent yourself from getting short and trapped. That's almost just as good. And another thing you got to remember is this price could have never necessarily been highlighted in any kind of pre-market prep that you would have done. And so pre-market stuff is important, but real time is always going to be more important. Things you didn't expect that you could adjust to in real time. Not unlike a football game where you could prepare all week for the team. If they change something and adjust it to you, how quick are you able to adjust and then make the necessary adjustments accordingly? You can't just go on what you thought was going to happen. You also have to incorporate what is happening all the way the time as a quarterback approaches the line of scrimmage and sees his defense that he's up against, as real in real time as you could get, as close to real time as you can get. Trading a market, one of the big weaknesses that people have is they're not in a position with any kind of tools to give them more and more skill to read the real time. It's a lot of hocus pocus stuff that they're used to investing their time and energy in, not what players are doing, what other people are doing. And that's where other people's positions come into it, because it's defining why price moves in the first place. Because every trader, no matter your time frame, is trying to do one thing. What are we trying to do? Predict where price is going to go. So you have to define it as clearly as possible, or else how the heck are you going to predict something you don't understand how it moves in the first place? You don't understand how it moves, yet you're going to try to predict where it's going to move. And so when you see this, using this as resistance as I'm talking, once it gets above it, it's pivotal. I'll speed it along here. Once it gets above there, finally, it never looks back. And you could see it. I think it rallied another 5 or 6 handles. Let me play it. And that's where your predictive skills could get sharper. You have to have the right tools. Another thing I always say is there's always a better way to see the same thing. But most people never learn what the thing is, what the concept is. There's no coincidence that it chased it a little higher in that little jump once it got above 10, which is where that 400 lot offer was. But most people don't know and identify the thing. Therefore, they never put themselves in a position to hold the proper tool and then get that tool to a better way to see the same thing. The tool gets better. And it's like a cordless drill. You don't even know what a cordless drill is. You never used it. Then you understand it. There's better battery life to it, and it gets better. But the concept of using the tool is the same in its first generation. Most people never get to the first generation of what and why price moves in the first place. But there's no coincidence. Once it got above 10, it was able to pop.